Hey, Hayden.
Todd, what's going on?
What's happening, buddy?
Great, man. How are you doing?
I'm doing well. It's a hot day here in Maryland today. Felt like summertime was making a return.
Oh, we must have switched seasons. It's chilly and rainy here in Atlanta.
Oh, yeah? You
So
sending the rain our way?
I'd love for it to get out of here. That's for sure.
So, what'd you do today?
Man, today I had some great meetings with my team. I ran some numbers on a building I'm looking at doing, a little storage conversion. And I put together a contract for the purchase of some self storage metal that I'm deconstructing and moving to a different location. So a little bit of a busy day here.
Yeah.
What
Wow.
about you?
Oh, we had a sales meeting this morning. Did a little bit of running around. I have a referral that I'm working with. So, went out and looked at some properties and yeah, just we're busy, man. Things
Just
are
running around, getting it done, huh?
running around. You make your money out. I make my money out in the field. I don't make my money sitting behind a desk, though.
Yep.
It seems like the tasks keep trying to push me to paperwork, but I keep trying to push it to other people.
You got to focus on what brings in the money.
That's right. Big bank deposits. That's the only thing.
Everybody wants to sit around and do what's easy, but you got to get out there and do what's hard to make the money.
Amen.
Right?
Amen. I'm excited, man. We're going to have some fun. We're going to spend the next hour or so together.
Yeah.
It'll be a lot of fun tonight. Guys, we are going to talk about commercial real estate tonight. So really excited. There's a lot of information out there online that talks about wholesaling, flipping, residential rentals. And when we're talking about residential rentals, we're really talking about 1 to 4 units. So it could be anywhere from a single residential dwelling to a multifamily up to 4 units. Tonight, we're going to talk about commercial, which is anything over 4 units and the different aspects of commercial real estate, how to get started. We've got a great guest tonight. I'm Todd Sachs. I'm your host of our Tuesday night podcast. I have a real estate brokerage here in Maryland. We help buyers, sellers, landlords, and tenants of both commercial and residential real estate. But if you're anywhere else in the country, I have an amazing broker network. I would love to hear from you. If you don't have an agent, reach out anytime, and I will point you in the right direction to a rock star in your town. Now, guys, thanks for joining us tonight. It is a live show, and what that means is you can comment your questions and get the answers you're looking for. So tonight, really excited. We have Hayden Crabtree. He's coming from Atlanta, Georgia, and he's an amazing young man. I've been in this business for a long time, 30 plus years, long time. But anyway, Hayden, he's done amazing things. He's going to share with you tonight how he got started, his story. He wrote a book. I haven't read it yet, but I will. But it's tons of great reviews online. Skip the Flip. He's going to tell you how he got into the commercial real estate business, what he's up to now. Hayden, man, welcome to our show. Tell everybody a little bit about you.
Man, Todd, first off, thanks for having me. If anybody out there hadn't heard of me, that's my fault. My goal is to help as many people as possible learn the powers of commercial real estate investing. I learned those powers firsthand when I was in college. I had somewhat of a mentor really before my personal development journey began, who told me you need to read Rich Dad Poor Dad. And I knew I always wanted to be an entrepreneur when I was growing up, but I never knew what I wanted to do. And after I read that book, I said, I think that real estate investing is where I'm going to dive in. And I was pretty much struck after that. I just got online. I went to University of Georgia in Athens, Georgia. Got online, typed in Google, real estate investing, Athens, Georgia. And that's where my journey began, And I found a forum there where they were talking about, I read this one guy who was talking about how he had wholesaled 8 duplexes, so 16 units. Then he went on about a year later to buy them back from the guy he wholesaled them to, put some money into a renovation, did a refinance on them, owned the deal with no money down, made a couple $100,000 in wholesale fees. And at the end of the day, had no money in the deal, had equity, had tax benefits, and, still had cash flow. And I was in school to learn how to be a business owner. And I realized at that point, they weren't teaching me. They were teaching me how to be an employee, right? Nothing wrong with being an employee, but that wasn't what I wanted. And so I just said, man, I got to reach out to this guy. And I started eventually skipping class to go work for a real estate mentor to learn to do what I actually wanted to do. Before I got there, I reached out to that guy, kind of stalked him on the internet a little bit, found his phone number, called the guy and said, hey, my name's Hayden. I see on the internet, looks like you make a lot of money from real estate. I don't know anything about this, but this is what I want to do. Can I buy you coffee? Can I buy you lunch sometime? He said, hey, I don't have much time. I'm busy. I'm on my way to an investment property right now. If you want to meet me, I'll be there in 15 minutes. I just said, text me the address. I'll show up. So I ran down, got in my car, met the guy. When I got there, it was a 6-unit property. And, he was kind of showing me around what he was doing, some of the renovations. And I said, listen, I have no money, no experience, no connections, and I have no idea what's going on here, but I know this is what I want to do. And I'm so willing that I'll work for you for free. And he said, okay, show up tomorrow and let's get to work. And so that's how my journey began. I started working for free, skipping class to go work for free for a real estate investor when I was in school. And, at that time I was really lucky because he'd been investing. He took the traditional route of what a lot of real estate investors do, which is I have a job. I don't like my job. I want to get out of my job, but I also don't have any money. So what I'm going to do is I'm going to go wholesale deals until I can try and figure out, get enough cash to flip deals. And then when I get enough cash, I'll buy single family rentals. And he worked that plan. And then he realized, hey, once I've built enough equity in my single family rentals, I can 1031 these tax-free out into bigger apartment buildings. And so he was doing all of that whenever I first stepped in. So I got thrown in the fire from day one, right? And, during that process, trying to find investment properties, we ran across a self-storage facility there in a hometown of Athens, Georgia. Didn't know anything about self-storage. I really, at this time, wasn't even aware of how great commercial real estate was. But I just became a student, learned everything I could about it. And, we just went on a journey of buying storage, trying to figure out, I didn't have any money. So how do I buy stuff when I don't have any money? And, that's where I cut my teeth, man, honestly.
Well, that's the big question. How do you get started when you don't have money? I mean, I think a lot of what we see on the internet, a lot of people capitalize. I mean, there are a lot of great ways to learn how to get started. I think did you graduate? Did you end up graduating?
Yeah.
College?
I have 2 degrees. Yeah.
Yeah. And I went to college for a semester, and a lot of people, sometimes when I say that, I'll get a comment or two where somebody says, oh yeah, I get it. You drop out of college. And I never advocate that. I don't, I think 2 things. I think one, college, formal education is one of the best things you can do in life. I mean, but it's not for everyone. Right. And what, as you said, I mean, if there was a university that taught you how to be an entrepreneur and guaranteed that you would be successful, you'd never be able to get into it, right? I mean, it would be so expensive and there would be such a wait list. So it's a lot of it is what we do. And I think that internally, and I know we've spoke before, and you're not really from, and neither am I, a background of entrepreneurs. It's not like mom and dad were business owners and things like that. I mean, and guys, we're not saying that it's, what we're going to talk about, what we're teaching is our experiences, how we did it. And it's not for everybody. And, there's nothing wrong with having a job. There's nothing wrong with starting out with a flip. It's nothing wrong with having 2 rental properties. It's it's what goals you have and the motivation that you have. And, the energy level that goes along with it. I mean, as the older I get, the more I say, I don't, I pick and choose what I want to get involved in now because, I had a lot more energy when I was Hayden's age and, would go out and be a lot more aggressive than I certainly am now. But so let's talk about this, and you hear these stories. So Rich Dad, Poor Dad, I mean, out of a lot of people that I speak with, that seems to be a catalyst. I think, I don't know how many copies that have been sold of that or how, read, but it's a great book. And, really, people that are interested in real estate, it's a good way to get a lot of knowledge. But there are other ways that you can gain real estate education. I went through the licensee route, got my real estate license, started with something called CCIM training. and I've given this out before, ccim.com. It's a certified commercial investment member is what it stands for. Very expensive classes, but it really teaches you a lot of the foundational stuff, the market analysis, the financial analysis, really important stuff when you're talking about stepping into commercial real estate, because the risk is much greater and the due diligence is much more important than doing a flip or buying a rental property that you can't, it's hard to be taken completely out on doing a flip or whatever. You can lose money, but when you buy a commercial piece of property, like a self-storage, like you invest in, Hayden, there can be some risk involved. So how did you kind of give us some of the steps of, you worked for this guy for free, right? You started out, you're like, hey, I'll work for you for free. He took you up on it. Some people may not be in a position to be able to do that. Maybe they're older in life. Maybe they're in the 30s, 40s, 50s, but they want to get involved. Give us some of the steps that you took to kind of go on your own and fund some of these deals.
Yeah, well, they're really, everybody thinks that I need to be Daddy Warbucks before I can go buy a commercial real estate. And it's really just, it's not true. The fundamentals of making progress, or I guess I'll start here. I'm coming out, Todd, with this book next week, Skip to Flip 2. And the premise of this book is that there are 3 keys to completing any real estate deal, no matter how big or small. Number 1 is the deal itself. Like, everything has to be driven by a good deal, financially speaking, a matter of returns in a good market. Like, that is the fundamentals of any real estate project. Okay, that is the
now you're saying the purchase price. Is that what you're saying? The good deal is?
Well, it doesn't have to be a purchase price. I mean, it could be, I could overpay for a property, but if I've got a great plan and a great project, I could pay a fair value. I don't have to get it 70% off for it to be.
So you're saying that analyzing that deal, that's the important part. So then
being able to, where I would tell, no matter what position you're in, the place to be able to start is understanding the financial system and metrics upon how to rank a deal and its merits based off of the cash flow and equity that it'll produce into the future, right? And so the 3 keys to any deal are the deal itself, which is the most important. The second is the management, both the property management and the asset management. And then the third piece, which actually comes last, is the capital. The capital piece, I mean, it's important. You got to have money, but it doesn't have to be your money in order to do these things. There's a lot of different ways to do that, But I really kind of liken that to a car ride or a car trip is, hey, there are 3 things needed in order to get a car ride done. Number 1 is a vehicle. You need a reliable vehicle. 2, you need somebody who knows how to drive that vehicle. And then 3, you need fuel, whether that's gas, diesel, electricity, whatever it is. And that's the same. In real estate, you got to have a deal. You got to have somebody who knows how to drive that deal. You got to have the fuel to get that deal going. And now most people know this from their teenage years, but you don't always have to have your own gas in order to go on a car ride. You can let other people ride with you and you can get gas money. Right. And so that's how I try to explain this real estate deal. If you got a car and you know how to drive it, go find somebody who wants to ride with you and have them give you gas money to get in on this deal. Right. And so the gas money, metaphorically speaking, could be equity that the property, the owner, current owner, the seller has in the property. It could be investors who want to invest with you. There's a lot of different ways, to complete deals. It doesn't always have to be cash out of your pocket.
So how do you go about analyzing the deal?
Yeah. So, the first step to understand is what is a pro forma? How do I analyze a pro forma? A good pro forma is a financial sheet in where you analyze the income, the expenses, the debt service, and the cash flows on a property, right? Fundamentally, that's where it all starts. Is this going to be a cash flow positive project in terms of every single month, every single year? Is this project going to generate cash flow above and beyond its own operating expenses? And then is it going to generate it at a level that's attractive enough to get an investor, right? And so that first metric we want to look at is cash on cash, which is the same for residential as it is commercial. These fundamentals apply for any type of property. Next is just asset value. What is the value of the property? Not only what can I get it for today, can I get it for below what it's worth? I'd love to do that, right? I'd love to have instant equity built in. But what is it going to be in the future? And how can I knowingly know what it's going to be in the future, right? That's why I love commercial so much, is that in the commercial world, I don't have to rely on fair market values. I don't have to rely on sales comps. I am in control of the income of that property, and commercial property is valued based off of its income. Right. And that's why I love commercial so much, because I feel a lot better about knowing what the value is going to be in the future. Right. And that's one of the reasons I love storage or really any kind of commercial deals. And so I built a platform. I mean, there's a lot of pro formas. There's a lot of templates out there. I built what I think is the world's best deal analyzer in a system that's called My Property Stats that I live and breathe in every single day. And that's, the best place to start is what's the income, what are the expenses, and what's left over after the end of the day after I pay my bank or my investors, right?
So, a lot of people say, with housing, when we talk about it, and I see both sides of the fence. I mean, I've been a commercial agent. I've helped people analyze the deal. I've helped developers through the years. And, when you're looking at a piece of property, you want to see what its highest and best, like you said. I mean, it's not, I always say, you need to buy it right, because depending on, what you need to do, there are a lot of development costs. So, if you can get a great deal, buy something under market. But in this market, that becomes more challenging because the competition and the cash is out there. But there are a lot of people that say, residential is, that 1 to 4 units can be a much safer bet when you get in, versus commercial. I mean, you've got your different sectors, right? You have industrial, you have office, you have retail, and then you have residential. It's kind of like a cycle. And the industrial, your manufacturing, and your flex space, where then you have traditional office. There's people sell. You need people to market. You need people to sell. You need administrative stuff, and then your retail. You need to get the products and the goods out to the market. And then obviously that creates jobs and it fuels the residential aspect of that, cycle. And, a lot of times you can tell where things are going. But, one of the things, Hayden, and, I like your opinion, I mean, you can't predict pandemics. If you were you're in commercial real estate. You're in. I know we've spoken. You like storage, and that's a hot, very competitive, very low cap rate. Marketplace. A lot of institutional money, a lot of futuristic, projections. Because when you're dealing with, lower, cap rates, you're really buying that future income, and you're predicting where the market's going to go. But traditionally, for the last, 20 years, self-storage seems to be, hot. Competition stepping out. But, what do you say to the people that are looking to get into commercial, and with the smaller operators that have really had it fed to them in the last year and a half, basically in the restaurant space, if your tenants were restaurant related or, retail related, office related? What do you say to these people by what we've gone through in the last year and a half?
Man, what do I say to them? I mean, I say to them, try to learn a lesson from it. I mean, in my book, I talk about, not only do I love commercial, but I love multi-tenant commercial, right? And so I think that if you go look at some of these big industrial complexes, you can have $10, $20 million industrial buildings with a single tenant in there. And that's why in the industrial space, people put so much effort into, well, what credit is your tenant, and show me your tenant's financials and everything on that, because there's so much risk in that one place. And so, personally, out of commercial, I think multifamily and storage are my favorite, and storage being my favorite because we don't operate under eviction laws. We operate under lien laws, and we don't have to deal with evictions. And so, I feel for people who, tenants have gone out of business, who have been in states where, your tenants don't have to pay. I mean, I really think it's not fair, and so, I really don't have much to say other than, try to exit the asset that you've been wronged in, and try to get into an asset that has the pros, that your old asset didn't. I mean, there's really not much more to say other than that. I mean, I think that overall, luckily thanks to the support of the good old Federal Reserve through a lot of money and some interest rate help, your asset value hasn't completely tanked as it should in a free market. But, other than that, try and get your equity out while you can and move to something. Because now we've been in a precedent to where if we ever have any more pandemics, which, we had swine flu, 10 years ago? Pandemics happen, I don't want to say frequently, but every decade, right? We now have a new playbook of what will happen. And so the next time one rolls around, don't say, man, I didn't know this was going to happen. Yes, you did. You just saw our new response, right? So be prepared.
So would you buy an office building today
to convert to storage, Todd? That's probably it.
Mm-hmm. Yeah. So that you're focused primarily on self-storage. So if you were to tell your best buddy what to get into, you believe wholeheartedly in the self-storage model.
In most markets, there's certainly some markets where, there's way too much competition and it doesn't make sense, but there are plenty of markets out there where it's fundamentally, really, really good. But I wouldn't down multifamily, or I wouldn't down multi-tenant industrial or anything like that in good markets. I think one thing we've also learned is the market in which you invest in from a political standpoint is very important of how will your government react and treat your tenants. I think I live here in Atlanta. We were the first state to open evictions back up, which some people say is heartless. Other people saw landlords in need who, people made an agreement to rent from them and they weren't upholding that in the agreement. So, I would just say generally my advice to my buddy, to anybody, would be buy multi-tenant, properties that the government isn't going to show up and stop evictions. Generally.
So, I try and tell people, and we can talk a little bit about funding deals.
Yeah.
And, there's really different aspects to funding the deal. So you would either have your own money or other people's money. And that other people's money can come from certainly different channels. The first channel, would be the bank. That's probably the least forgiving channel, right? Because you don't pay the bank, in most cases, they're going to start the foreclosure process and kind of work to take back that asset. Then you get into like private money, and then, kind of syndicating deals and, other people's money, friends and family, things like that. That can have a tendency to be a lot more lenient when you go through situations where you need more money, you underestimated a couple things, you have down months where you're not getting income. I always tell people, if you can find somebody that has a lot of money that you can sell that deal to, that wants to invest with you, go for the person that has a lot of cash, right? And then you've got a good partner. How do you fund your deals?
It's a deal by deal situation. The way I would always love to fund a deal is to create, some sort of non-traditional agreement with the current property owner. So I've done lease options on multi-million-dollar properties. I've done 3% down owner finance deals on $500,000 properties. These deals are, a lot of people think that these are only available in residential deals. They're not. They're available in all asset classes.
Can you give us some examples? So, and Hayden, I think, you're right. A lot of times, and I don't know what your experience with this has been, but a lot of times these owners of commercial buildings, they've been there, they've done that, right? Mm-hmm. They're not desperate, but they're just ready to move on. And a lot of times, they will work with you sometimes, like you said, they'll do an owner finance deal for a period of time, give them some cash, give them a second kind of bite of the apple, some equity in what it is that you're pitching to do. But can you give us some examples of what you've done and the creative ways that you've made that happen?
Sure. So there was a deal on the market. It wasn't on the market. It was kind of hidden in the depths of the internet. This was in Southwest Florida. It was an RV and boat storage facility. And, I was looking at the deal. I was underwriting the deal. My purchase price was coming in at what I thought I could pay for it was $2.2 to $2.3 million. The owner was hung on a $3 million sales price. He had other people show up, offer him 2.6, 2.7. He would not take it. He was mentally hung on $3 million. Well, I didn't just make an offer. I got to know this guy because I really wanted this property. And the upside, he was well below market rates. I knew I could raise that. But where he was at currently in his income, it just didn't make sense, right? $3 million was a no-go. And, I built a relationship with that guy more than just, hey, I want to buy your property. Hey, why do you want to sell the property? Tell me about the property. How long have you had it? Oh, you started this from yourself. Oh, you went through these different phases. You used to be down here every single day. Just showing like a real interest in his business other than just like, hey, here's some money. Let me buy this investment from you. And we ended up building a relationship. I didn't know this guy beforehand, right? So some people say, oh, well, he built a relationship with him. It's not like I knew him. Anybody could go build a relationship with anybody. And, after talking with him, spending a day with him in person, having lunch together, I said, listen, I really want to do this deal. I know you're hung up on $3 million. So let me think about what we can do. I made him an offer. I said, I'll give you your $3 million, but I need to give you your $3 million in 5 years. And in the meantime, I'm going to give you exactly the amount of money you're making right now, which is $10,000 a month from this property. I'm going to guarantee you $10,000 a month. And listen, you have to understand what people's problems are, right? His problem was that he was concerned about his health. He didn't want to spend the time. He had a granddaughter that he wanted to spend more time with. So I said, there's no downside for you. I'm going to give you your $3 million. I'm going to give you how much money you're making right now, and I'm going to solve your problems, right? I got into that deal with no dollars down, okay? I went in, the first month that I went in, I raised the income of that property by $8,000 a month. Okay. If I had not raised the income, I wouldn't have made any money because I was giving him the exact amount of money the property was making. So in order for me to make money, I had to make the property do better. Right. But I went in with no risk. Right. I mean, my risk was like guaranteed this guy $10,000 a month, but I was already being produced. All I had to do was not drop the ball and just take it the other way. Right. Which comes down to due diligence. Am I really confident in these numbers of the market? Right. If I just did one quick Google search, I'm not going to be confident. I'm talking about going to competitors, seeing it, talking to consumers, really understanding that market. And anyways, the first month I raised the income, $8,000. I still have the option on that property for $3 million. And I've had people offer me $5 million for the property. So,
this is like a common theme that I'm hearing from you. And one is you're a relationship builder.
Yes, huge.
And that is, I mean, hands down, that is the key to being successful. You have to, you hear people say it, when networking, in-person networking, why do you go to networking events? People do business with people that they know, like, and trust. When you take a general interest in what it is that they are trying to achieve, there's a backstory, right? I mean, when you're jumping into commercial real estate, you're dealing with business owners. When you're buying a flip or you're buying a rental property, you're dealing with a different emotion. Somebody that has maybe lived in the house, somebody that is selling it because of whatever reason they're selling it for. But when you're dealing with a commercial piece of property, you're a little higher stake. You're a little higher, financial value here. That these people are entrepreneurs. They're business people. They like it when people connect with them, understand what their goals and objectives are, and are willing to help them achieve what it is that they're looking for, rather than coming in, insulting them, trying to put high pressure demands on these types of people. It doesn't mean anything to him. I mean, He was stuck at 3 million. Somebody came in and said, look, I'll give you 2.6, take it or leave it. He said, I'll leave it.
Yeah.
Right. You came in, you got to know him. That's awesome. Smart.
Thanks.
I mean, guys, that's something to learn right there. Guys, if you have any questions for Hayden, go ahead and comment them in. We would love to answer those for you. Have any comments? You have any questions?
Yeah.
If you're watching it after we're live, I know Hayden would be happy to respond to your comment. Go ahead and leave a comment. And All of
Real
Hayden's
quick before we
information.
move on, Todd.
Yeah.
So
Yeah,
to go back to that story, you asked me a little bit earlier, Hayden, when you're analyzing a deal, you're talking about getting it below what it's worth, getting a good price on it. I did not get a good price on that deal. I paid $700,000 more than I wanted to. $700,000 that I did not have, right? But again, it goes back to understanding the numbers of a deal and being able to project the income and the expenses into the future, right? And people say, well, how do I do that? How do I learn that? You got to get reps, right? It's like when you go to the gym. If you want to build muscles, if you want to bench 315, you can't just think about benching 315. You got to go out and you got to practice. You got to try and get stronger and stronger. And so the skill, and I'm sure that Todd, you're very strong in this, as most CCIM people and people who've been in real estate a long time, of understanding the numbers and being able to predict and project and interpret data from sellers and look at markets and understand what the numbers are telling you. But that's the biggest problem that new people don't have is they say, well, how do I even start? Well, it's like your first day in the gym. How do I even start? Well, you just go try, and you'll get stronger and you'll learn and you'll learn. And so I just want to say that before we go on, because, going back to the how do I analyze deals? How did I analyze that deal? Right. Well, I'd analyzed 100 other deals before I analyzed that deal.
Absolutely. And I've used that analogy where, you don't just go and take 400 pounds off the bench and try and lift it. You'll crush yourself and take yourself out. You have to build yourself up to it. I mean, that's a great way to look at it. And there's always risk. It doesn't matter how much you analyze a deal. I mean, I have been in situations where, I have not been happy with every deal that I've done. I can tell you that. I mean, I'm in one right now. It's the gift that keeps on giving. And what I mean by that is I keep on giving. I keep writing checks. It's been 10 years and counting. And I just can't get it. I just can't get anybody to bite on the deal anyway. So, having the experience, 30 years in the business, still does not mean that I don't make mistakes. But you learn from your mistakes. You try and, like Hayden's saying, educate yourself as much as you can, at least crunch the numbers, have a system, start out small. One thing I want to say to, if you're listening, if you are a business owner, you're a small business owner, you should look at buying your location for your business. Because what happens is, and I've been in situations where I've helped people sell their business, the business with the building or the business with a lease. Let me tell you something. If you need to be thinking about succession plans, right? What happens to your business? If you're a business and you have a location, location's important. You want to analyze the location. I always say in commercial real estate, depending on where you are, there's a going to work side of the road, a coming home side of the road. It matters. There's traffic devices that can, prevent people from coming into your location. And even if you're investing in commercial real estate, median strips that get installed, if you're on the wrong side of the street, can kill your deal, kill your building, kill your tenants, kill your business. But I always say, to start with, if you're going to go in commercial and you're a business owner, start with trying to buy your location. And like Hayden said, if you can get a multi-tenant situation where, you can set up a couple businesses, maybe rent the office, maybe rent a bay in your garage, maybe, if you have a small building, maybe rent a floor, rent a unit. But I always say start there. And there are a couple reasons, because one, while you're working, paying somebody's mortgage payment, you may as well pay your own. Right. The other thing to that is if you ever go to sell your business, it's a lot more valuable with the real estate. The other part is if you ever decide to stop your business, you have a piece of property that you've paid down and that you can rent for retirement income, passive income. So I always say start with that. Let's talk about, the flipping. I mean, you wrote a book, Skip the Flip. I haven't read it yet, Hayden. If it's anything like the title, you're telling people to skip the flip.
I am.
So let's talk about that a little bit. A lot of people listening, they're looking at ways of getting in, and our audience, a lot of our audience is starting out. They want to get into real estate. They don't know how. They're looking for ways. YouTube, podcasts.
Well, I think thanks to HGTV and Tariq El Moussa, that a lot of people want to live the glamorous flipping life. And, I was very fortunate, Todd, because whenever I got started with my mentor, he was doing it all, and whenever I looked at our return on energy metrics of how much time are we spending for how much money are we making, hands down, bar none, the amount 1 hour put into value add commercial real estate paid the greatest amount of money. And not only did it pay the greatest amount of money in equity returns, but it paid it in cash flow. It paid it in tax benefits. It paid it in everything. And so, most people, if you want to learn that lesson firsthand, you have to go do flipping, and then you got to see commercial, and you got to see everything. Well, I was lucky enough to see everything all at once. And that's really where, my energy into this subject comes from, is having actually done all that at an age where most people are really just starting. And kind of how the skip the flip came around was after I graduated college financially free, which I'm very thankful for. And after college, I didn't go get a job. That was my goal. I don't want a job when I graduate college. And that's what I worked towards. And after college, maybe a year or so, all my old buddies, who are working their finance jobs, making maybe, 50, 60, 70 grand a year, but working 90 plus hours a week. If I'd ever get to connect with them when they get off work, they just go, man, this sucks. I hate this. Like, tell me more about real estate, and, I'd have this conversation with them, and I try to start explaining the tax benefits and cash flow and how they should try and build cash flow to get out of their job. And, they'd always just say, but I'm pretty sure I want to be a house flipper. Like, I see that, and I see people make a lot of money. So I'm pretty sure I want to be a house flipper. And I just say, listen, man, you got to skip the flip. I'm going to teach you, go directly into where you want to be, because your whole goal getting into real estate is I want financial freedom. I mean, 97% of the time when you ask somebody why they want to be in real estate, it's because they want financial freedom and cash flow in their life, right? And so why would you go and build? Flipping is an entire skill set. It is a business in and of itself. It is not something that any rookie can get in. If you get in, you don't know what you're doing, you're going to get toasted. You're going to lose a lot of money. You're going to lose a lot of time. And then you're never going to take that journey into where you actually want to get, which is cash flow. Right? So why would you build the skill set to get there? Because a lot of people say, well, I need the money. No, you don't. There are routes to get to where you want to be without the money. And so that's really where the motivation skip the flip came from. Secrets the 1% know about real estate investing. And that's the 1% invest for tax benefits. The 1% invest for cash flow. The 1% invest for inflation hedges. And so all of these things are, whenever most people want to get in real estate, they don't even consider it. And that's why I wrote the book. I wrote the book to give away. If anybody wants the book, if you haven't read it, you can get it absolutely free in PDF or audiobook at haydencrabtree.com/free book. It's absolutely free. I wrote this book to help people. I did not write this book to make money or anything else. This is for anybody who wants this resource. And so, that was just my path. Like, I had done some house flips. I made some money when I was in college doing house flips. But I just said, man, I'm going to have to flip 20 houses a year, and I'm going to have to take on all this risk. And if I had been a house flipper whenever coronavirus came around, man, I'd have been terrified. I would have been terrified that values were going to plummet. Now, they didn't, right? They went the opposite direction, which I'm happy for anybody who's in the middle of a house flip. But I don't want to be in that position to where my income is dependent on forces outside of my control. And one of the things I am huge on is control. And that's why I love multi-tenant commercial so much, is I get to control those cash flows. I get to be in control of when my income is going to come in. I don't have to rely on buyers. I don't have to rely on appraisers. I don't have to rely on any of that. Inspectors. I'm just going to rent you a storage unit, and I know I'm going to make money. Right. And so I'm huge on control. I wanted people to realize that real estate, you keep saying real estate is risky, and I agree. Risk is measured differently for everybody, but there are a lot of things that you can do to reduce your risk before you get into a deal. And that's a major key to know.
Yeah. And look, there is, investing, there's risk with investing, period. Right. The less financial wherewithal that you have in cash or carrying ability, really increases your risk. So it's one of those businesses that you can get. I mean, look, we all know that in our mortgage payment or our rent payment, the first of the month comes very quick. If you have an expensive car payment and you're going through, financial hardship or those credit card bills, the monthly cycle happens very fast. And, and the, surprises are really what are the biggest, scariest things about it, right? I mean, what you don't know.
Yep.
And, I think of things like what you don't know about the neighborhood, what you don't know about, the development or the lack of, what you don't know about, so, is it a neighborhood that is going up in value? Is it, did a major corporation close up and jobs were lost? And now there's, it's an area that may not be hot anymore or coming down the pike, right? There could be other influences, competition that goes in. So when I talk about risk, I talk about, things that you want to make sure you're as calculated as you can be. Look, I flip houses. And I'm in the business, and every day's a new day with that. Just Saturday, my roofer called me up and said, "Hey, we got a problem. I got a $5,000 budget on a roof, and it almost went to $10,000." So when you're looking at tight margins, I didn't climb up on the roof and rip the shingles off to see what the underside looked like. You can't always see the attic. So there are risks, much smaller risks. They might not cost you. I've seen situations in commercial real estate where it's cost another $150,000 over budget. It's cost another $1 million over budget because they were making you do something. So it's kind of like, depending on what your wherewithal is and your comfort level. I'm from construction background. I mean, I swung a hammer, I've been a general contractor for 30 years. So I have a different understanding. I always say there's three types of real estate investors. One is like Hayden referred to, they watch HGTV, they want to get involved in it. They have a full-time job that they're never going to leave. They don't want to leave it. And they kind of invest. And it's very important that you connect with a team that can help you achieve what it is that you need to do, and that's affordable and that you can trust. They don't want to touch anything. They want to invest the money. They just want the return and maybe cash flows and appreciation. Then there's the investor that kind of wants to learn and be involved. They've got a job. They want to get out of the job. They want to transition into becoming that more full-time investor. So they're going to work in the job. They're going to pick up the trash, hang out with the subs, meet people, go buy materials. And then there's the third kind of investor, is the one that just does this full time. They've transitioned, they do it full time. They're contractors. They have their own crews, their own teams, and then for them, it's going to be a lot different because even those unexpected circumstances become more manageable because they're doing the work. So, I think, certainly a lot to learn. I don't disagree with you, though. The income reward, or the risk reward or the work reward, certainly in commercial real estate can be, outweigh certainly.
Massive. Yeah. I did, you talk about funding, there's a lot of funding out there. I mean, self-storage deals, you can get SBA loans with only 10% down. So I did a deal with a 10% down. Bought it for $550,000 and I sold it for $1.7 million. So turned $55,000 into $1.2 million. Like those things, they have risk. I signed on a dotted line for that mortgage. I had to go raise that money, but guess what? You can't get that kind of return in a house.
Do you think somebody could do it that has a full-time job? Do you think that somebody could go at what you just described, as successful if they weren't working at full time?
Well, so just to be clear, I mean, I did not sit at that storage facility. I did not take those customer payments. I think the biggest and most time-consuming aspect of commercial real estate is the acquisition process. I mean, don't get me wrong, acquisition process of any deal requires time. Thankfully, a lot of time can be done after hours, but you got to make phone calls to bankers. Bankers don't like to take phone calls after 5 or 6 p.m. So if you're going to do this, I think it is possible to do it while you have a job, but you got to be hustling. You got to make the phone calls on your lunch break. You're not going to passively spend 1 to 2 hours a week and get it done. It requires energy. It requires attention. It requires effort, to say the least. Now, after you're done, after you've got that property acquired and you've got done whatever the business plan is for that, then it's very hands off. I mean, you need to make sure you have a team in place, you have systems in place. But don't be confused. I don't think there really is. There's very few passive real estate investments, at least on the front end. It can be passive after you get it done, but this idea that real estate is a passive business, it is after you get it set up. But it's not passive getting it set up, finding deals, funding deals, raising money for deals, getting loans, closing deals. That's not passive.
Yeah, it's a hustle.
Anything that is passive, turnkey deals or whatever, you're just not going to make the returns that you could.
The other thing I want the audience to kind of understand is, your situation and what your goals are on more of a kind of a long-term plan, because when you are getting more into commercial real estate, it's not as liquid. I always say, as far as, real estate is not a liquid asset. Okay. I mean, you're investing in something that it may take a while to sell. And the other thing I want you to understand is, like Hayden is describing, yes, he gave that guy in this scenario, $700,000 more than what he wanted to pay, but he also said that it was undervalued, that it was worth the $3 million. And it did cash flow and he was able to make it happen. But what I want you to understand is that a lot of times, when you're dealing in residential, especially single family units, it's a much more saleable asset as far as being able to get out of it quickly. So if you're in a situation that changes and you are in single family homes or single unit dwellings, right? Meaning it's not a multi-unit, there's no apartments, there's not an upstairs and a downstairs apartment, it's a 1 unit property. The buyer most of the time for that is someone who's going to live in it and make their home, right? So that becomes more valuable empty than it does with a tenant inside, right? It makes sense, right? Because if you have a tenant, they can't move in with a tenant in there. They're willing to pay a retail price for it and a lot faster. When you have multifamily, even a 2 unit or 3 unit or 4 unit or 12 unit, 100 units, it's worth a lot of times is based on its cash flow. So being full, not being vacant, having the ability to get a higher future income, but the investor or the buyer for that property wants a deal. He doesn't want to give you the profit. He doesn't want to give you, more than he should, right? Understandably. So when you get into commercial, my advice is if you're looking at commercial, that's why I say business owners should be looking at buying their location, because when you own a business, chances are you're going to work it for years. You're going to be dedicated to the business. You're going to do what it takes to pay that mortgage payment. But you should consider that when you're, these are long-term investments for the most part. Unless you get in like Hayden, makes a good, upside to it, makes it more valuable, adds a higher value add, and then he can sell it and make a profit on that. So just keep that in mind. Hayden, anything else, man? You're working on a couple other things too. I mean, you've got just an entrepreneur. One thing kind of leads to the next. You started a program too, right? You want to talk about that a little bit?
Yeah, sure. So I mentioned it briefly earlier, but I and kind of going back to your last statement here of selling stuff. I mean, listen, I am all for whenever I get into a deal, I like to ask myself, am I okay to own this thing for the rest of my life? That is literally a question that I ask myself. If I am not okay with owning something for a very, very long time, I should not be getting into that commercial deal. Commercial deals, I've sold some stuff. I'm glad I did because it helped me get to a place liquid wise that was good for me. But I would have no problem holding on to those deals for forever. And that's where commercial real estate needs to be. If you want to make a 1 to 2 year investment, don't do it in commercial real estate. Okay. Do not do that. This needs to be a minimum of 5 years, preferably 10. And I would look at owning it even longer than that. Okay. And so that's why whenever I build pro formas, I don't build a 1 year pro forma or a 2 year pro forma. I build 20-year pro formas. What is this property going to perform over 20 years? And so, yeah, what I built, I mean, I would say I'm a little bit of an entrepreneur, but whenever I went through selling some of my properties, I had investors. And so whenever I wanted to sell those properties, I had to tell my investors, I had to say, hey, here's how much your return, here's your anticipated return on your investment. Well, if we have stocks and if we have, other equities, then we can log into our Charles Schwab or our Ameritrade or whatever account, and we can view how our stocks are doing. And we can click a button and we can have that money sent to us immediately, right? Well, what I found was that just doesn't exist for real estate investors. The insight, the data into your properties. Now, there are thousands of property management companies that help you collect and manage your properties, but there's no investment management platforms. And so that's a mission that over the last year I've been on, is to build an investment management platform for real estate investors that gives them real-time insight into the performance of their properties and help them make smart decisions to say, hey, maybe I should not keep this property because it's not performing well. Managing, I talked earlier about the 3 keys of a deal, the management, and the capital. One of the big management pieces, I don't do any property management, but I do investment management. That is, how are my deals performing and am I returning the highest possible amount of money that I can on my capital? And so what you're seeing on the screen here is my platform. It's called My Property Stats, and it hosts all of your documents in one place, helps you gain real-time insight into how your properties are performing. And you can also analyze and build pro formas inside of this so that you compare your existing portfolio with new deals that are in your pipeline, right? So this is real data, everything for real estate investors, not property management, real estate investors in one central place. So it'll save you hours and hours on your taxes. It'll save you hours and hours on finding documents. Eventually, we'll get to the place where you can get loans and buy and sell investment properties inside of this platform. But as of today, I think it's the world's best deal analyzer when we talk about going through and how do I find out the numbers and build a pro forma. This is a system that'll do it for you, right? And so this is one of my new pet projects. I like to stay focused. So I hate to say that I've learned a lot about the software world, but it's all for the betterment of my real estate community.
Yeah, and it also helps you.
Yeah, absolutely.
I mean, so you're taking, some of the pain points that, you've had to go through and look, when the numbers, I mean, a lot of times, and, guys, if you're interested in real estate, a career in real estate, reach out, even if you're not in Maryland, I would be glad to answer any questions that you have. I get asked all the time about commercial, being a commercial agent, how do you get involved? What do you need to know? There are a lot of residential agents that are interested in it, but it's a lot different. It's a very analytical process. It's not as emotional as, residential real estate. But the big thing is a lot of people have no idea. They're business owners. They have no idea what they even need a day in sales, how much their hard costs are, on the products that they serve or sell. And, a lot of times it's understanding, getting a business owner to even understand that, because they just do what they do, right? They just go. What Hayden is building is, when you are wanting to be in commercial real estate, you have to understand, what are the demographics? What's the traffic count? What kind of business is going to go in here? And, how much do people need to make? If it's a certain business, what is it that they need? How many cars pass by a day? What are the tenants that go together, the tenant composition, that can, build each other, the traffic into their business and putting those businesses together. So there's a lot that goes into it. A lot of analyzing goes into it. And when like Hayden, this project, this program he's working on, it's important when you're buying more properties that you can, if you need an investor, that you could show them, hey, look, I can put my thumb on my costs, my business's pulse at any given moment and give you real time data. And that's really, that's awesome. Hayden, and you're a smart guy, you have a lot to offer people. It's amazing, man. I wish I was doing what you're doing.
Come aboard, Todd. Man. Let's get after it, man. We'll buy some Maryland storage units. We'll get you on My Property Stats. But going back to your numbers, man, Todd, have you ever watched Shark Tank?
I love that show.
My favorite show.
I love it, man.
You ever seen an entrepreneur come in for a pitch and the shark say, hey, what was your gross margin? They go, I'm not sure, Mark.
Right.
It's like, get out of here, right? If you want to ask people, how do I raise capital? Number one thing is know your numbers, right? If you want to raise capital, if you've ever watched, there's some awesome entrepreneurs on there who know every single statistic about their business. And that's the way that you need to be as an investor. You're a business owner as a real estate investor. And so you need to be able to know before you buy that, what are the numbers on that deal? And you need to have evidence to back it up. You said earlier, this is not as emotional as residential real estate. There should be zero emotions in commercial real estate, in real estate investing in general, even if that is residential. The My Property Stats platform is for residential and commercial investments, right? There should be no emotions in it. If I were to ever go through a pro forma that somebody was showing me, and I would say, where did you get this number here, right? Where did you get the utility expenses you're estimating? They say, well, I don't know. Well, that's the wrong answer, right? You should have a backup for every single piece of data into your financial analysis there. So
the only emotion, Hayden, that you'll have is when you didn't plan right and you didn't know your numbers and you made a mistake and you can't pay your bill. And, so on the commercial side, the emotions are when you're a business owner and you're in the wrong space. There's some emotion there, you know what I mean? Absolutely. But you're right. There should be no emotion in investing. The numbers either work or they don't. When you're selecting a placement for your business, you should know the data. You should analyze the data. You should know whether it's a good spot for you or not. It comes back to location. You've got to stay with that thought process. Not everybody needs a sign, but there's a reason why they need that location, and you should know it. What are the predictions, man? Let's talk predictions. Where are we going with this economy? Where are we going with the real estate market? What do you think?
Man,
that's a loaded question.
This is a tough subject because if you had asked me in March of 2020, I'd have said, strap up because we're going for a ride. And obviously we have gone for a ride and it was good to strap up, but we went in the opposite direction that I was thinking that we were going to go. I think, a lot of people talk about we had the strongest economy ever in 2019 and the numbers really didn't point to that. We had a good economy. It seemed really good. Interest rates were still being dropped even before COVID, which points to some alternative signs. But where are we going, man? I think so much of that is dependent. I think that the amount of money we're printing, the amount of imports we're bringing in versus exports, something's got to give, fundamentally, we're not there, fundamentally, we should not be at all-time high house prices, all-time high commercial real estate prices, all-time high equity prices. We should not be at those all-time highs, especially whenever we can't hire people. Our government pays people not to work. Those are tough conditions for business owners. Every business owner I talk to right now is having a very hard time hiring people. And what I think that most people don't understand is that wealth is not generated through dollars. Wealth is generated through productions of goods and services. And if we as a country don't produce goods and services, we cannot continue to prosper and be wealthy. So right now, if all you had to do was print money to be wealthy, well, then Tanzania would be the wealthiest country in the world. Okay. Or Zimbabwe. I'm sorry, but they're not, right? They have to wheelbarrow money to buy a loaf of bread. They got to pay $1 trillion for a cracker. And so, we're in this, for those of you who don't know, we're in this position now because the United States dollar is the reserve currency of the world, meaning everybody all around the world buys and sells things in US dollars. That generates a demand for United States dollars. People in transactions between China and Australia occur in United States dollars. And that's because we're the reserve currency of the world. If we were to switch, all of our wealth would go away unless we began to reproduce goods and services that we could export and generate wealth with. And so, something's got to give right now. Our administration doesn't want people to work. They want people to vote for more free handouts and goods. And that's a tough position to be in for the longevity of our country. It works in the short term. It's proven to not work in the long term. And so I think eventually something's got to give, but I just can't predict when that's going to be. The Fed met, I think, a week or 2 weeks ago, and they talked about they're looking at raising interest rates in the end of 2022. Who knows if they'll actually do it? Something's got to give, but our government doesn't want to raise interest rates because the amount of debt we have, we wouldn't be able to service that debt. So something's got to happen. I think being in hard assets is a good thing, like real estate. Being in hard assets like gold or silver is a good thing. Something's got to give eventually. I just don't know how long. I would have thought I already would have gave. That's why I
agree with everything you're saying. I totally agree. I think, out of everything that we've learned, I can't tell you if I had a nickel for every time I heard, this is out of stock. I don't know when it's coming in. I know Joey's, our content director. He's, he had his car down for a couple months, man. It was missing a piece. He couldn't rent a car because they wanted $2,000 a month for that. And, a chip or whatever. So, I'd love to see that we learn a couple things and bring some manufacturing to the United States. I like to think that industrial manufacturing, I can remember back, in the day when we had things, stamped, made in the USA. We had a lot of products that we manufactured. We had good steel mills. We had a lot of stuff that created great jobs and, office space, though, I got to tell you, we saw office space declining. We saw companies getting smaller in their demand for office space before the pandemic. We saw WeWork becoming very popular, subscription-based living, subscription-based, go anywhere in the country that you want, sort of like, traveling in a hotel but having an apartment. And then we saw the pandemic kind of bring a hard stop to that kind of WeWork shared space. And I think that businesses learned that people need to be in the office. We watched production increase when people were working from home. And then now we see and hear where they're saying that it's having the exact opposite effect, that people are now producing less at home than if they were in the office. So I think people are going to return back to the office. I think people love to go out to eat. We go out to eat, and the businesses, the restaurants seem to be thriving now. The question is, did they survive? Are we looking at new brands, or are we looking at the brands that said, we made it, it was a struggle, but thanks to our good community and customers, we did a great job before, so they continue to patronize us. But guys, I thank you for watching. Hayden, I thank you for being on our show, man. This was fantastic.
Thanks for having me. Been fun.
Yeah, we'll have to certainly do it again. Guys, check out Hayden. If you haven't already done so, we'd love for you to tell us what you think of our podcast. You can do that by liking this video. Also subscribing or following or, shooting us a comment. I'd love to hear from you. Guys, until next week, thanks so much for watching.